Arkansas, and welcome to this week's edition of Arkansas Money Talk, brought to you by the team of Retire Path Wealth. I'm your host, Kristen Oakley, and I'm joined by the President of Wealth Management, Dale Cole-Clazier, and co-founder, Mark Smalling. We've got a great show for you today. A few weeks ago, Dale, Mark, and I had a very important conversation all about the unique retirement planning needs that women face. And you guys got such a huge response from that show. And really, we only got to scratch the surface. There's so much more to talk about. So we're going to continue that conversation today. How are you guys doing?
Great, doing well.
Good. Well, talk a little bit. I know for our viewers who maybe missed last show, we're going to review, but this is really important for you all because of how many female clients you work with. So just remind our viewers how Retire Path Wealth has really been able to specialize in this space of meeting women's needs.
Well, we really have, Kristen, and we have a large number of female clients. About 70% of our clients are actually females. Mm-hmm. And, some of the unique things we talked about in the last episode is females earn on average 82 cents on the dollar compared to a man. So there's less money going into savings. There's also career interruptions that happen. Women live longer. Mm-hmm. So we've got a plan for 5 to 6 years on average, longer life expectancy. And with that comes long-term care needs mm-hmm. that are usually on average longer than typical for a male.
Mm-hmm. And of your 70% of clients that you work with, you have married women, you have divorced women, you have women who have been widowed. You also have a lot of single women and people who just have never been married. There's lots of different challenges, especially when you're having to do all this on your own. Okay. But we want to specialize today on the strategies that women can use to empower them to retire securely. So whether you yourself are a woman or you have a woman in your life who you love, you are not going to want to miss today's important continuation of this conversation. And I know you have no shortage of stories. Anything come to mind of a woman you've been helping recently that you'd like to share with our viewers?
Yeah, well, and Kristen, as you mentioned, there's so many, it's really hard to say woman issues, except the fact that generally we've got a plan for longer life mm-hmm. And potentially more expensive health care longer. So in many cases, we have a scenario where you're planning for income, and the thought is in the earlier years when we're more active, we're going to spend more money than we will later. Mm-hmm. We're much more likely to need to continue a higher income stream if there is a woman in the mix. Mm-hmm. And so, yes, and so there's been a few recently in very particular cases. I can think of one where we've had a divorce and we come out with what we think are substantial assets, and then can just kind of doing the math in her head mm-hmm. That says, I think I should be able to do, live life at this level. Mm-hmm. And reality is once we go and run analysis, we're probably a little bit below that number. So really the transition for her at that point was, I need to continue working mm-hmm. A little longer than what I thought was going to happen for me now mm-hmm. Originally. And so in a little longer was really just about 65 or 66 instead of 62. Mm-hmm. So it wasn't a substantial difference.
Right.
But the differing amount of the thought is, gosh, if there's only one of us, we only need half of the cash flow, which that's not correct. It's about 75% of the cash flow. Mm-hmm. And then planning for another 4 to 5 years longer mm-hmm. Due to the fact that we've got a female that we're working with, and so we've just got a longer life expectancy. So there's just some small tweaks and adjustments in that scenario where it came from the planning she had done when she was married to what it was is now being single.
Yeah, and I know she's grateful that she has your guidance to help navigate through that, because that's got to be very unsettling. We know that a lot more folks are getting divorced later in life. There's something known as gray divorce. Right. When you've planned one way and all of a sudden life throws you a curveball, knowing that you can pick up the pieces, and to your point, it wasn't working too much longer. Right? It was a couple of years, but that can have a substantial increase in her retirement income picture. So that's encouraging when you can say, okay, let's move some of these pieces around, let's make some adjustments, and you're going to be okay.
Well, and Kristen, one of the other big issues, and sorry, I don't mean to interrupt, but that with that is lots of times after a divorce too, you have some funding of children that may go on that wasn't anticipated, whether it's not trying to get ahead of one spouse or the other, but there's a lot of things that you feel like, gosh, maybe I didn't have control over the money that I would like to be able to do for my children. That's a common conversation that we have. And do I have the funds to be able to do that?
Right.
And then folks that have just gotten divorced or they're been widowed, widowed, they don't realize that taxes, their tax brackets have basically been cut in half. And
explain that, because I think we touched on this last time we talked about it, but the widow's penalty is very alive and real, and a lot of folks have no idea. So explain it more fully.
So whether you're widowed or divorced, your tax brackets have virtually been cut in half. So that means that where you may have had to get to $130,000+ to get past the 12% tax bracket, we're now looking about half of that to get there. So we're going from 12 to 22. So people think, well, I've got all this money. Well, some of that money is going to be going to pay Uncle Sam and the state of Arkansas. It's not all yours.
Right. I think that's where when people say your tax bracket's cut in half, no, the income threshold is cut in half, which means you're going to be in a higher tax bracket sooner, right?
Yeah, right.
So a bigger percentage of your money is going to go to taxes.
Right. So you fill those buckets, and so if you need them, and especially because Del, we've run into this where they may have to buy a house. Maybe they sold their house that they had together, and they're purchasing a new house. So they think, well, gosh, I should be able to purchase, as Del was saying earlier, we were talking about this, I should be able to purchase a $400,000 house, and I've got plenty. And you start running the numbers, it's different than what they think.
Right, because Uncle Sam's going to get a bigger cut of what you have.
Well, and it's not just income taxes now, because the estate tax scenario also has been reduced. So those with higher asset levels may get into an estate tax issue sooner than they would have now that there's just one lifetime exclusion instead of two they're working with.
Right. So lots to navigate here. I'm curious, as we kind of move on today's show, we're going to be talking a lot about strategies specifically for women. But how can starting the financial planning process early, regardless of a woman's marital status, really set her up for success?
Well, in that tax situation, again, specifically, is if we're always planning for having some point in their life when we're going to have to deal with that higher tax bracket, maybe the idea of starting Roth conversions sooner, or simply planning how we're saving the money. Again, we've talked about this, over and over again, that about 80% of all retirement savings is in pre-tax deferred accounts. If some of those contributions are in a Roth option to where there's going to be lower taxability of the money at some point in the future, of having more diversification in the tax situation, more money in a non-qualified position. And interestingly enough, that is one of the things we do see with a lot of single women, is they do have a tendency to have more assets in different asset classes because women have a tendency to be a little more focused on immediate savings or liquid savings than just retirement planning.
Right. Well, again, so much goes into building a comprehensive, holistic financial plan. We're going to continue today's show talking about specific strategies to address these unique challenges that women face. And as one of my mentors always said, I've shared this with you guys and on the show in the past, I used to travel nationwide presenting just to women in the financial education space. Fair or not, women do need to engage in more financial planning than men. So what would your encouragement be to a woman who's watching right now who might have been wondering, I'm not sure who I can trust, who can come alongside me, who's going to have my best interests at heart? What would you say to someone who's wrestling with those very questions right now?
Well, I would say to someone, if you're out there and you haven't had a look at your financial situation, had somebody take a look and actually help you determine where you are. And sometimes it's just getting that, where am I right now, that perspective, what are my goals and aspirations? And how is all of this that I have going to work together? Do I need to do some things about catching up? Do I need to add some contributions to my retirement plans at work? Do I need to start setting up an emergency fund if I haven't already done that? And then actually laying out a plan, an income plan, and then knowing how to maximize your Social Security benefits, which we'll get into in just a little bit later. We'd really recommend that you guys call us today, come in, so we can give you a clearer picture of what your retire path looks like in the future.
Wonderful. Mark Dale, thank you so much. To our viewers at home, that number to call to receive your very own complimentary written income plan is there for you on the bottom of your screen. 866-724-3893. Again, this is for no cost, no charge, no obligation. It's simply an invitation to have a conversation to see how the team of Retire Path Wealth can help and serve you. Or if you'd rather connect online, you can simply grab your smartphone, just click that QR code in the bottom right-hand right-hand corner of your screen, and that will get you connected as well. Stay with us. We'll discuss specific strategies to help empower the women in your life or you yourself to retire securely. We'll be back with more right after this.
We take the planning seriously. We run all the numbers, gather all the information.
I mean, I've heard of firms calling 70% outcome, goal achievement. Hey, we're there. Well, when I went to school, a 70 was a C minus. That's not how I want to walk into retirement.
Everything we do from a planning perspective at RetirePath, we take the fiduciary responsibility, not just with the finances, but with everything, trying to put you in the best place possible for yourself. A successful retirement to me is not having worries about where dollars are coming from or about your health coverage.
Tax code's going to change. Medicare is going to change. Social Security, it's going to change, folks. You want somebody that's going to understand how those changes affect everything else as you move along. That may be great general advice, but it has nothing to do with your personal situation.
I mean, to literally see people come in the office that are scared and there's a lot of trepidation, and having them leave with that weight lifted off of their shoulders.
Let's get your data in, allow us to analyze your situation, and see if we can be a valuable partner in your financial life.
Making sure that everyone that comes in to our office leaves feeling like they've received something of value from us. RetirePath is a unique place because we built it from scratch.
Well, welcome back to Arkansas Money Talk. I'm Kristen Oakley here with both Dale and Mark from RetirePath Wealth, and we're so glad that you're joining us today. If you're just tuning in, we are continuing this important conversation all around the unique retirement planning needs that women face. As we mentioned earlier, we did an entire show on this subject matter a few weeks ago. The team got such a huge response, and really there's a hunger for knowledge, guys, about specifically what women can do to empower themselves to retire securely. So what we want to do now is focus on some of the specific strategies geared towards women to help them meet the unique challenges that they face. And, again, whether you yourself are a woman or you have a woman in your life who you love, these strategies really apply to all people, but they're critical and crucial for women specifically. So let's get into some of those.
Okay. Yeah, Kristen, one of the most obvious ones is if you're married and you're not working outside of the home, you have the ability to still make IRA contributions, whether they be on a pre-tax or a Roth basis as well, as long as you meet income limits, by using the spouse's income to make those contributions. Mm-hmm. So many times we may only have one working individual. They're maximizing their contributions in their 401k or their qualified savings plan already, especially if they're up past, maybe matching limits. It now may make sense to make a spousal contribution as well, using the working spouse's income to make a contribution for the non-working spouse. Mm-hmm. We've got the same limits, the same availability. The idea of adding to those contributions as we age through, at age 50, we get access to catch-up contributions to move things that way. Mm-hmm. The other one is just kind of the advent and the usage of life insurance as well. We're always income planning, and one of the major uses in a non-working spouse situation for life insurance is the replacement of the income that spouse would have made if they don't make it to their retirement age. Mm-hmm. So, simple example, if I'm age 50, my mm-hmm. spouse is supposed to work to age 65 at 100,000 years, that's $1.5 million they should earn over that time frame. It may make sense to have that amount of money in life insurance available as a death benefit to replace the income that wouldn't be created if an event happened that was there. That way they have options, they have choices. Mm-hmm. Because the last thing a person wants to do is have to worry about going right back to work while they're mourning or grieving. And that happens both ways. But again, specifically, we see that more commonly in the woman's situation. Right. Not only that, but also the consideration of life insurance on themselves. Mm-hmm. Because life insurance on the cash value side can be a wonderful savings tool. Mm-hmm. Also, and I know it's not really our conversation today, today, but it's also one of the best ways to fund future long-term care possibility needs as well. Not something we're planning on for a number of years down the road, but if I already have the vehicle in place to be able to do that, we have a negative event that occurs, money comes in, I have a pool to put that money to.
Right.
Now maybe it's going to serve multiple purposes. It has the ability to create tax-free income, plus provide healthcare benefits later on, plus the one reason most people like life insurance for that type of resolution is I'm always going to get that death benefit back if I don't need to utilize the money. It's going to then pass to my beneficiaries.
Right. Unlike traditional long-term care insurance policies, which you would pay into, but if you didn't use it, you lost it, and then that money was just gone.
That's
Or
correct.
traditional term insurance for the same thing. I mean, if I can solve the same needs and I can utilize that money again later,
Right.
could be a great option.
Yeah, for sure. Well, Social Security is a huge piece of anyone's overall written income plan, but specifically for women, let's talk about some of the claiming strategies, because this is really an area that the team of Retire Path Wealth specializes in. A lot of financial firms out there don't even touch the Social Security conversation. They'll tell you to go elsewhere. They'll just tell you to go down to the Social Security Administration. But again, the Social Security Administration can give you information, but they are not allowed to give you individual personalized advice based on your unique situation. The only way you're going to be able to get that kind of personalized advice is by working with advisors such as yourself. So let's talk about that.
Well, Kristen, a lot of women don't understand the different ways you can actually start collecting your Social Security benefits and how you can take it either off of your spouse's benefits, off of a deceased spouse's benefit, or even an ex-spouse. And so we need to look at all the different options that are available to you. And oftentimes people aren't aware of that. If you were married for 10 years and didn't remarry before age 60, you actually can receive benefits off of your ex-husband's account, even if he's remarried. And it doesn't reduce their amount. They don't know about it.
Yeah, he will never know, right? That's
right.
the other thing that comes into
I think we mentioned this the other day. I mean, we've in another episode that we saw a gentleman who had 3 women actually collecting benefits off of his one Social Security account. Mm-hmm. It happens.
Yep.
But there's also certain strategies you can use by taking survivor benefits early if you're in that case, because you can take survivor benefits as early as age 60, allowing your benefits to grow and switch over. If your benefits would be greater, or if the survivor benefits would be greater in the future, you could actually start with your benefits and then switch over to the survivor benefits later on too. So there's a lot of different unique strategies. And as you mentioned, Social Security cannot give you advice about that, but we can actually run those different scenarios and help people figure out what might work in their best interest.
Well, and not just that, Christian, as we mentioned too, doing the fact that we've worked with a lot of single women in the healthcare industry, especially nurses, because we know how physically demanding that job is,
for sure.
that you'll get a lot that are in their early 60s that begin to feel the wear and tear of that job.
Right.
They may be thoughtful to think, gosh, I can begin to collect my Social Security benefits at 62 because I really can't complete this job anymore. We'll have 5 or 6 a year that we walk through the conversation to find out they're probably really eligible for disability through Social Security, where they can apply for that disability benefit, obtain the higher earnings amount, and then receive that until their regular Social Security benefit would kick in at full retirement age and have a substantial increase in lifetime income. We very commonly see that mistake attempted to be made, which could cost somebody tens of thousands of dollars to hundreds, over their lifetime.
Yeah. How surprised are a lot of the women that you've worked with who've come in and you've been able to run these different Social Security scenarios, that there were options that they didn't even realize were available to them prior to meeting with you?
They're shocked to see what options are available to them. And when they go to talk to the Social Security office, oftentimes people take the easy route.
Yes.
Whether it's disability or applying for survivor benefits, it's oftentimes just easier to just go apply for your own retirement benefits, because you can do that. You don't have to have a meeting with anyone. There's no special calculations that have to be run, and there's not a lot of paperwork. But oftentimes, just spending that little extra time, searching through what the options are, makes a huge difference.
Yeah, for sure. Well, talk a little bit. I know we're offering the complimentary written income plan to our viewers. Talk about the Social Security piece. When folks come in to receive this complimentary written income plan, what are they going to learn about their own Social Security situation as a result of doing this planning process with you guys?
Well, so our Social Security optimization or maximization strategies actually will pinpoint when the exact correct time for you to take it based on your situation. So it's taking into account all of your different income strategies and putting that as part of it. So when you leave, you'll have clarity about when you need to take your Social Security and what makes the most sense for you. So if you haven't had something like that done before, please call the number, schedule a time to come in and let us show you what time you should take your Social Security benefits.
Awesome. Mark, Dale, thank you. I'm excited for more folks to take advantage of this valuable information and resource. Again, if you would like to know when is the optimal time for you to claim your Social Security and what strategies could be available to you, we encourage you to come in and sit down with the team of Retire Path Wealth and receive your very own complimentary written income plan. 866-724-3893 is the number to call. Or again, if you'd rather connect online, simply scan that QR code and that will get you connected as well. We'll be back with more right after this.
We got to know where we're headed to. So I always call it a target that we're shooting for. The critical pieces of that is, at what age do you want to start looking at retirement becoming a reality? And then simply, what do we need for income to continue to live the standard of living that we're either accustomed to or that we want to have at that point? It looks like having a written income plan in place so that you know over the next 20 to 30 to 35, however long that time frame is that you have a sense of security of knowing that you're not going to run out of money. The idea is I like to be as tax efficient as possible, but we're going to be very proactive and futuristic, proactive tax planning. And then once we put that written income plan in place and they can look down to the end and there's still positive numbers left at the end of that calculation, that's the most rewarding part of it, because you're going to retire once.
As Americans, we strive for better, from a better house to a better career to a better life for our kids. Better has become the American way. When it comes to your retirement, what does better mean to you? Does it mean more income? A flexible lifestyle, better solutions. A better retirement begins with an income plan. To get your complimentary written income plan, call the number you see here. You only retire once. This is your opportunity to plan for better.
Welcome back to Arkansas Money Talk, where today we are having a very important conversation, a continuation of a conversation we had a few weeks back regarding the unique retirement planning needs that women face. And really the biggest domino, the biggest issue that affects all the others is the fact that we as women are living longer than men, on average 5 to 7 years longer. And with that longevity comes the issue that 80% of all women die single. So we have to address this, and I would love for you to share, how are you able to help protect women if their spouse predeceases them?
Well, we have a perfect example that's just been in the last couple of months into the office, where we had a scenario where the husband has passed away, kind of surprisingly, and everything was absolutely in order. I mean, there was literally instructions for where to find everything, to do everything, to exactly who to call, all of that. The challenge is the surviving spouse didn't have a relationship with the people she was designed to call. And so, yes, documents were mailed out, but there were no instructions. And so she actually came to us as a referral in the aspect of, gosh, I have all these forms that I need to fill out. I don't really know the people that sent them to me. And it asked through, had been referred to us. We came in, we helped to get the initial documents filled out to get, the joint accounts changed to a single account and those kind of things. The IRA accounts moved over. There was a will that was in place. The beauty part is it wasn't really needed because she was a surviving spouse and everything transferred over. Now it's the conversation of, now what happens to this whenever I pass?
Right.
And it was just simply walking through the aspect of, Do you want a trust or a will in place? Again, I hardly ever use the word need, because that's not the case. It's what are your wishes and how do you want them to pass?
Right.
But to able to help her to understand what that next step looked like, even though they had things written out for how it would pass to her, and then after that, she had a few little things that she wanted to change, and she wanted to make sure that the income was there. And now that was her concern, because she had a little different investment strategy than probably what her husband had before, but didn't have a relationship with that other advisor. And so we were able to help her walk through that and understand, and then help her work through things in the forward.
And I love that she knew that she could, she was referred to you guys, that she could build a relationship with you and have you to walk her down this path. Because that can be very scary when all of a sudden you are on your own and you're trying to figure these things out and you're grieving on top of everything else. So what a blessing that she has you. But I think this is an encouragement to more women to make sure that you have that partner, to be able to come in, have this plan built before that day comes, so that you know and can trust who's going to be walking you through that. And you guys do so much more than just income planning. So talk about what else you're able to do.
If we can bring up a chart, we've got a circle of service that we take everyone through. So it's not just the income planning and the investment planning. We also protection plans. Dale was talking about life insurance earlier, tax planning, legacy planning. What happens to these assets? Once we're no longer here, and oftentimes whether it's women that are on their own or as part of a couple, women tend to be more concerned about legacy planning, and they tend to drive that more so. And so that's something that's very important. And then healthcare, because women tend to live longer. So we're gonna take all of these things into account when we're looking through those. And so it's something important that we do. And we have had special women's events. We have a Valentine's luncheon that we have every year just for women. And they oftentimes bring friends with them, and it's something that our clients have looked forward to, because gosh, how many years have we done it? We've done it several years in a row, and it's something that they look forward to. And
For sure.
So if you don't have a partner in your financial life that can help you with all of these different areas and put the picture together, we really encourage you to call the number, scan the code, schedule a time to come in and talk to us. We'd love to be that partner in your finances.
Wonderful. Mark Dale, thank you so much. And to our viewers at home, thank you for watching. 866-724-3893 is the number to call to schedule your complimentary written income plan. We love you, Arkansas. Thanks for watching. We'll see you next time here on Arkansas Money Talk.